Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. I know many of you have been asking for a while. We have finally released a PDF guide for the scorecards, and you can find that in the link in the description below and also in the pinned comment. And that guide will give you all of the signals from the scorecards and how to use them. And for those of you who wish to join us in the week as well, I am now doing daily analysis videos as well as daily scorecards on the GMT website. So with that said, let's get into today's video. Okay, so if we have a quick look at the economic calendar, you can see there isn't too much going on Monday and Tuesday. It is really this event on Wednesday, 7 p.m. out of the US, which is setting up to be the big one. And there has been talk of a potential 100 basis points hike from the Fed because of the CPI miss, or the miss in core CPI last week. That was what caused the dollar to rally last week. And that fear of the Fed potentially raising 100 basis points instead of the expected 75 basis points caused one of the biggest sell-offs in quite a while in the S&P 500. It was down roughly about 5% on the day. And that was an indication of what, in my opinion, can take place if the Fed does decide to surprise to the upside. We already saw some panic coming in just on the premise that they might surprise to the upside with a 100 basis point hike. And I think if they really actually go for the 100 basis points hike, bearing in mind they haven't really given any indication this time that they're going to, unlike in previous times when they were going to hike 50 and they leaked out beforehand that they were looking at 75. They've really just been quiet about this. And that's why, in my opinion, the Federal Reserve are most likely going to go 75 basis points. And we could even see, when we look at the DXY, if that happens, that could be the catalyst for a little bit of a correction from the current levels in DXY. Now, again, I'm just giving you my opinion. I do not know what the Fed are going to do on Wednesday. I just believe a 75 basis point hike is more likely, because if the Fed, especially after getting respect from the markets at Jackson Hole, which they did, if the Fed then decides to go and surprise to the upside, really without saying anything at all, I do believe that would be an unnecessary step and actually counterproductive to their overall goals of reducing inflation whilst also preventing major economic contraction. So I am looking for a 75 basis points hike on Wednesday. However, just bear in mind, if you get involved in the markets before then, you are taking a higher risk, as is always the case with interest rate decisions. And the markets themselves are probably going to do nothing, or very, very little, nothing significant between Monday and Wednesday. So just bear that in mind. Not a great idea, in my opinion, to get involved in lots of different trades before Wednesday, because they're likely to just correct. And so the final thing really are the other interest rate decisions on Thursday out of Switzerland, out of the UK, and also out of Japan. So next week is setting up to be a very, very big week. So whether you want to play this before the interest rate decisions or after, take more risk or less risk, it's really up to you. However, just bear in mind these events are taking place and are likely to dominate next week. Okay, so let's have a look at the scorecards for the majors heading into next week. And the first thing to note is the euro and the dollar are still on the positive side of the scorecards, just as they were previously. And what was this telling us over here? Avoid dollar and euro pairs, generally speaking, especially euro dollar, because that pair is most likely going to just correct. And what happened? That pair just corrected. Even the dollar itself, yes, we got a rally from CPI, but it really didn't go anywhere after that. And that still remains the case heading into this week. However, just remember, interest rates take preference over the scorecards. Why? Because scorecards are made up from data, economic data. And when we have an interest rate decision, the economic data can change. So it can change the scores. So the interest rate decision has to take preference over the scores. The scorecard cannot predict whether Powell is going to raise 75 or 100 basis points. So the first thing to note is that euro and the dollar pairs are still telling us to be patient, and that overall market opportunities are somewhat drying up compared to when these are on opposite sides of the scorecard. However, I would expect that to change on Wednesday when we have FOMC to shake these scorecards up and for the markets to find a new sense of direction, whether that be higher or lower. The next thing to note is the pound is at -2 and the New Zealand dollar is at -2. So I do like both of these for shorts. However, I prefer the New Zealand because this actually has some bearish momentum, whereas the pound is actually previously coming off of, I believe, oversold levels actually. It's just kind of pulled back a little bit. But this is not bullish, This just simply means it's not as bearish as, say, New Zealand dollar at -2 with some momentum from the scorecards from last week. The Swiss franc is still the best long play, and I do prefer Swiss franc pairs next week, but just bear in mind we have the interest rate decision out of Switzerland where they're expected to raise rates. And to the downside, the Japanese yen is sitting at -4. However, those who signed up for the daily videos will know the daily scorecards actually told us to cover Japanese shorts on Thursday. And so heading into this week, yes, this is oversold, but I'm giving you the heads up that I'm not going to be shorting Japanese yen. And I think really with the yen pairs, we need to wait and see what takes place after FOMC and also the Bank of Japan meeting on Thursday. So it could be a tricky week next week. I think we need patience heading into next week. However, we do have a plan and I'm going to share that with you in this video. Okay, so starting with the DXY, because this is very important going into next week. Many of you know I did post on Twitter that I am a dollar bull, but I did think that the dollar could struggle above the 109.77. I've had this on here for at least a week, or maybe a couple of weeks. And I did note on this day that I believe the dollar was going to put in a near-term top, but not the top. And we have put in a top since then. We failed to break above the highs since I tweeted that. The thing is, though, going into FOMC next week, if the Fed were to raise 100 basis points, you are, in my opinion, going to see the dollar spiking higher, break into new highs, and this near-term top will have finished. But I do still see a path for continued dollar correction. Now, again, I'm not making any predictions before FOMC because we're only going to know this after FOMC takes place. But if the Fed comes out and raises only 75 basis points, despite the fact this is expected, because we had such a panic over the 100 basis points potential rate hike from the core CPI miss, I do see a path where traders who panic bought over here or who got involved over here could start to pull their positions, because some of this could be a hedge. Don't forget, people do hedge equities with dollar long positions. That could unwind, and that could actually be the catalyst for a bigger decline towards 106, 105. Again, I'm not making a call because I don't know what's going to happen in FOMC, but I'm just highlighting how I could envisage a catalyst taking place in order to help the dollar correct or to ease. Whether it goes higher or lower doesn't really matter because we can trade both ways. We are going to be looking at pairs for dollar strength post the interest rate decision, and also there's a couple of pairs here if we do get a weaker dollar from FOMC. So I'd rather be reactive next week if you are trading this short term, but just conversationally, I do see a window of opportunity here for a bigger DXY correction if the Fed only goes 75 basis points and their rhetoric is not too harsh. But again, let's see what Wednesday brings. Next is the euro. Now, the euro, of course, is going to be dictated next week by FOMC as well, because the euro makes up 57% of the dollar index. And just like the DXY, if the Fed comes out, only raises 75 basis points, and at the same time, they're not as hawkish perhaps as they were at Jackson Hole, but I still expect them to be quite hawkish. I don't expect a dovish pivot or anything like that. But just if they come out with 75 basis points and they're not as hawkish as people expected, I do think we could see a short-term relief rally in the euro. That is not a reversal. That would simply be a deeper correction before at some point the next leg down. I am still overall bearish on the euro, and I am overall bullish on the DXY. Again, I'm just giving you a potential path for near-term euro strength and a near-term correction in the DXY. Next is the pound. The pound is extremely bearish, and we took out the 1.1450. There actually isn't any level down below here on this chart. There is no more data which goes back below this level. We do have data for the levels on, say, pound dollar to the downside, so we'll look at those levels, but I haven't added a level down here just yet because there is no data on the pound. I am still very bearish on the pound. Again, it wouldn't surprise me if the DXY corrected perhaps on a less hawkish than expected Fed, but that would just simply be the opportunity to short the pound at a better price, in my opinion, over the next few weeks. So again, we really need to wait until FOMC takes place to see what's next for the pound. Next is the Swiss franc. This is the top long position going into next week. And in fact, my favorite markets are pound franc to the downside, New Zealand franc to the downside, Aussie franc to the downside. The problem is this is also going to be affected, or these markets are going to be affected by FOMC because the dollar affects all of the currencies in terms of risk on, risk off. However, we also have an interest rate decision out of Switzerland on Thursday. So It may be tricky to get involved with these. If you are getting involved before the interest rate decisions take place, best to have wider stops if that's what you want to do. Otherwise, we're going to look for these opportunities after the interest rate decisions take place towards the end of next week. Next is the Japanese yen. Now, the Japanese yen has been very bearish, and as we see in the major scorecard for next week, it is still oversold. However, as I said, those who signed up for the daily videos will know on Thursday, which was this day right here, they did tell us to cover Japanese yen shorts, and we actually gapped up the very next day 1.32%. It was actually up nearly 1.5%. So I'm just, again, giving you guys the heads up who are watching just the weekly Forex forecast. I am not going to be involved in shorting the yen, despite the fact it's at -4. And if the Fed comes out overly hawkish next week or unexpectedly raises 100 basis points, I believe you're going to see problems in the stock market. I think we could see a very big sell-off, and this is going to likely see a flight to safety in the Japanese yen. So with a risk of FOMC next week causing a bigger risk-off event in the stock markets, it would be risky before FOMC to get involved in any Japanese yen shorts. And as I said, I'm off the JPY shorts until after next week. Then we can look at those again. Next is the Canadian dollar. We did have a big sell-off, and the Canadian dollar has been kind of choppy. In fact, on a relative basis, it's been one of the better to trade to the long side. Why? Because all of the other markets have been selling off hard, and this was kind of choppy. In the scorecards, it was telling us it was sort of bullish to neutral. And so therefore, I think last week it was even just about bullish at +2 as a score. But you can see there was, with the risk off that came into the markets with oil selling off, this has finally looks like it's getting a bit of momentum to the downside, and that's why CAD positions are off the table. And in fact, we did see a weakening in the scorecards as well, partly because of the outlook for oil. So going into next week, I'm not really interested in the CAD pairs. If you are trading them, I would only be looking for shorts on balance. I wouldn't be looking at CAD long positions anymore. Next is the Australian dollar. We came down, took out the target almost to the pip at 0.66890. Again, this is likely to be dictated by FOMC. Although the Australian dollar isn't in the DXY index, it is sensitive, the most sensitive to risk-off events. And if we start to see US stocks selling off because the Fed come out too hawkish, then the Australian dollar is going to be affected to the downside. And we will have a quick look at the stock markets in the US at the end of this video, and you will see that it does not look pretty, and I will show you exactly why I think markets could be at risk, real risk next week of selling off quite hard on FOMC. And last but not least, we have New Zealand dollar. Again, this is going to be affected purely by the risk on, risk off nature of what takes place around FOMC next week. I am bearish overall, and if stocks continue to sell off in the US next week, this is going to add weight to not just Aussie shorts, but also New Zealand shorts. Perhaps we pull back first, and then on FOMC, we start to see New Zealand selling off and week into the end of the week. That would be great. So I do like New Zealand shorts heading into next week. Okay, so let's have a look at the markets themselves heading into next week. Crude oil has been a short highlighted in previous videos. We did have a nice pullback, and we started to break lower here. You can see momentum coming in, and we're starting to flag. So any continued correction in crude oil is still viewed as an opportunity to look for further declines into the 80.62. Next is pound franc. We have come down quite a bit here, and we're lacking some momentum in pound franc. So ideally what I would like to see in pound franc is any pullback first, perhaps into Wednesday or maybe even into Thursday. If we can pull back like this, and then on FOMC or on the Swiss franc interest rate decision, we get a sell-off like this, which will be Swiss franc strength. I'm only interested in trading these three markets on Swiss franc strength. If we get a sell-off for whatever reason in the Swiss franc on the interest rate decision, I just won't trade it. But if we start to see this breaking down, we have the interest rate decision, we get momentum coming in, I'm going to look for a pullback, and I'm going to be looking for shorts into the 1.0863. Next is New Zealand franc. We came down, took out the target set in this market. This was a really good short from last week. Going into this week, there are some very minor targets in this area, but I've purposely only put the next major support on so you can see visually where we're at in New Zealand Swiss franc. This is the COVID low down here when the markets crashed during the COVID pandemic. And it just goes to show this is an entire area of volatility historically, and if we start to trade into this, we could actually see quite a big sell-off in New Zealand franc. We could see the next moves to the downside in New Zealand franc coming with momentum, and they could be pretty steep. So any pullback, again, perhaps we correct into the interest rate decision because that often takes place. Any pullback and then a breakdown on Swiss franc strength from the interest rate decision, maybe FOMC. I'm going to be looking at any pullback to look for shorts down towards the previous lows. Let's say as well, you could look for a conservative target at the 56.50 next week. But as you can see, that's just a psychological level here. There is really nothing but air once we start to break lower all the way down to the 0.5300. And actually, that kind of gap in the levels there is suggestive of quite a serious risk-off move potentially coming in New Zealand franc. Next is Aussie franc. This was another really nice move from last week. We came down. This was highlighted as one of the best shorts last week. We came very close to the next target. So what I would like to see is we've already started to pull back from this. Any continued correction, taking out previous highs over in this area, that would be fantastic as it gives us a nice move down towards the next target. Any continued correction into the interest rate decision or Wednesday, Thursday, I'm going to be looking for franc strength from those key events, and any breakdown, any momentum to the downside. Say we get risk off from FOMC and you see the franc outperforming, that would be an opportunity to look for shorts into the 0.6416. Don't forget though, you have the Swiss franc interest rate decision on Thursday as well, so any trades before that should be used with a wider stop and do carry more risk. Okay, so let's have a look next at the dollar pairs, because after the Swiss franc pairs, the dollar is the next best long. However, the difficulty with next week is the two best long trades are both interest rate decision weeks as well. So in terms of euro dollar, in terms of Aussie dollar, New Zealand dollar, and pound dollar, I'm only interested in trading these four if we get dollar strength from FOMC. So what I'll be looking for is a correction in euro dollar into FOMC, and then once the event takes place, if we get a breakdown like this with momentum, as often happens when you have these big events, that's your opportunity to start to look for a pullback. I'm going to be looking for shorts into the 0.9860. Next is Aussie dollar. We did come and take out the target at the 0.6684 last week. Again, heading into this week, what I'd like to see in this market is any pullback into Wednesday and then a break lower on DXY strength. This will be a market I will look for shorts down to the 0.6617. Next is New Zealand dollar. Now we did take out the target set at the 0.60150. And once again, I know this looks almost comical, this chart, because it is ridiculous, but the next significant area to the downside, or the significant support, is the 0.54730. Look at this. And this is because this was all a range covered with the massive amount of volatility during the COVID crash. So this is one of the things that tells me, especially with New Zealand dollar being a risk-off currency, this is a little bit worrying in terms of the equity market, and also it does tell me we could still have some serious dollar strength to come. Again, does that happen after a short relief rally first? Or do the Fed actually start breaking something, either by unexpectedly raising 100 basis points, or perhaps even the 75 basis points at this point is a little bit too much, especially considering where we are compared to previous cycles. We've actually already hiked a lot higher than previously when things started to break. So again, this is confirmation that I do think we have more dollar strength to come. And as I've always said, that dollar strength is probably going to come in a stock market capitulation. The question is whether we get a near-term correction in the DXY or not, and we're going to likely find out next week. And the final dollar pair, if we get dollar strength from FOMC, that I'm going to be looking to trade is pound dollar. We did take out the target at the 1.1411. And again, this is just ridiculous how large. I mean, it's not as ridiculous as the New Zealand pairs, but this is still a very, very large gap to the NzdChf support, and these can always run these very quickly. So any pullback in pound dollar next week into FOMC and then a sell-off on FOMC because of dollar strength, that's the opportunity to look for shorts in this market. Overall down to the 1.0886. If you want to take some psychological levels on the way down, you can. And the final Forex market we're going to look at is US dollar franc. We have interest rate decisions on Wednesday and Thursday for these pairs, but if we see the US dollar correcting and then on FOMC, the opposite of what the plan A essentially is here with euro dollar, Aussie dollar, New Zealand dollar, pound dollar. And remember, this is plan A because that's what the scorecards are showing. A bigger DXY correction is just my opinion. I don't trade my opinions, I trade the scores. And the scores are pointing still towards dollar strength. So any continued correction, but then if we get unexpectedly dollar weakness and we start to break out, especially if we're going to hike on Thursday, look for a pullback and look for further declines into the 0.9470. So this is only a backup plan essentially if we get dollar weakness instead of dollar strength, in which case I'll be looking at these four markets here. Okay, so wrapping up with gold, silver and Bitcoin, and we're also going to have a look at the US stock market. The gold-silver ratio has finally flipped. We've been bullish on this for quite a while, and because I've been short recently gold and silver, apart from last week when we took them off of the best list, but they have been best shorts, and silver was highlighted as the best short previously in videos, in weekly Forex Forecast videos, and it was the market which underperformed. We've been preferencing silver shorts pretty much all the way up. This has now changed, and as the gold-silver ratio is coming down and with momentum, it means going into next week, it sets us up really nicely for FOMC because it is giving us the opportunity, if the dollar is strong from FOMC, to short gold. And if the dollar weakens from FOMC or looks like it's going to correct, you don't have to short the dollar and pick the high. You can actually go long something like silver or other commodities. And also, we can also look at the same way Bitcoin. If we have dollar strength from FOMC, I'll be interested in shorting Bitcoin. So just like with the Forex pairs, we can be reactive instead of predictive from FOMC on Wednesday. If the dollar is strong, I'll be looking for gold and Bitcoin shorts. And if we have a reversal in the dollar because of reasons discussed or potential reasons discussed in this video at the beginning, then I'd be looking for silver long positions. Okay, so starting with gold, I've been short and we've been looking for short positions in gold all the way down, and we finally took out the 1676.87, which has been a longer term target for a while. This was the major previous low we looked at in last week's video. However, as it currently stands, we are structured for a bear flag, and the higher probability is for further declines here, at least into the lows and possibly onto the 1633. So unless we actually see a reversal in gold, I am still bearish, and if we get a bullish reaction from the dollar on FOMC, I'm going to be looking for a sell-off like this. And if you want to be extra safe when you're trading around FOMC, gold and silver are good for this because they don't react as much as some of the dollar currency pairs do when you have these big events. So any breakdown on FOMC on Wednesday, this is going to be probably one of my go-to opportunities to look for shorts down to the 1633.70. Next is silver. Now, I am overall still bullish on silver because don't forget, we're sitting below the major breakout level of the 21.420. And if we do have a big risk-off move in US stocks, silver is going to get smashed. However, if that fails to materialize next week and for whatever reason we get a relief rally and we start to see the dollar correcting, this would be a decent market to look at because we are forming a bull flag with very, very strong momentum, and any continued correction, say into Wednesday and then a breakout on FOMC, that's going to set up a nice opportunity to look for longs for the rest of the week into the 20.50. So again, you can be reactive, not predictive of FOMC next week if you don't want to try and work out in advance or get involved in advance. You don't have to. And I do think gold and silver actually are set up this week to perfectly play a reactive opportunity in FOMC after Wednesday. Last but not least, we have Bitcoin. Now, Bitcoin had a very, very strong sell-off, and I'm only interested in being short Bitcoin. If we get a relief rally or we get a near-term correction in the DXY because of whatever is said on Wednesday out of FOMC, if that happens and we start to move higher, I'm just going to leave Bitcoin. I'm only interested in short. So any correction into FOMC, that is going to be the opportunity to look for a sell-off in Bitcoin on Wednesday. And if that happens, I'm going to be looking for a correction or a pullback to look for shorts into the 17,567.45, which is the previous major low. But I am overall looking onto the long-term target, which I've had down here for a while, at the 16,492. Okay, so I want to wrap up the video with US stocks, and I want to just explain to you where I am on the US stock market. I haven't added them in every video, but I have been keeping you updated all along the way of what I believe is happening in the stock market. And I did say to you guys that this move up, in my opinion, was not a bull market, and none of the data was showing that this was a new bull market. The data has always been showing that this was just a bear market bounce. And we did start to roll over, and now we're sitting at the 3873.32 going into FOMC. My overall outlook for US stocks is not good. It is the same, my overall outlook, as it has been in March when I tweeted all the way back in March, this was before the yield curve inverted, that I believe a global recession is incoming and we are likely going to have a stock market capitulation in the near future. And I earmarked the second half of this year for a potential capitulation. Obviously, we haven't had that yet, but I do think if the Fed goes too hard on Wednesday, I think we could potentially start to see something break. And alternatively, if the Fed does come out slightly less hawkish and they only raise 75 basis points and we get a deeper correction in the dollar index, that is probably at best only going to lead to a relief rally, perhaps towards the 4177.51 before we do start the next leg down. So I just want to clarify with you guys, I'm not bearish on the dollar and I'm not bullish on stocks. When I talk about a bigger DXY correction, that is all I'm talking about, a correction near term before a steeper sell-off. So those are the two scenarios that I'm looking at currently, and we will see from Wednesday whether we get a near-term correction before the next leg down, or whether Powell really does go too hard and things begin to break over the next few weeks in stocks. So that is it for me for this week, guys. For everybody who's joined the daily videos on the getmetrading.com website, I will of course be with you every day throughout this next week. We'll be running the data beforehand and also after FOMC to see exactly what's going on. For those of you just watching the weekly Forex forecast, that is what I see heading into next week, and those are the short-term plays I'm going to be looking at post FOMC. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.